Hello and welcome everyone to Gold Asset of the Day for the 21st of May, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, this week we'll be reviewing gold prices for the week ahead. So first of all, let's just have a quick recap of last week's price action. So last week we discussed the potential for gold to give back those gains from the beginning of last week, where we saw gold break out to $1,300 per ounce. In fact, just slightly above that, to $1,303, after we saw retaliation from China against the trade tariffs put on China from the US. So we saw that have an immediate impact on gold at the beginning of the week, breaking above that 1300 level. However, gold then set up for a bear flag formation, and we identified that we had the potential to come into this resistance and very simply roll over and offer a great opportunity to sell short. That's exactly what happened later on in the week, and I hope some of you did manage to capitalize on that. We actually banked 190 points profit on our sell short from gold, selling from $1,297 all the way down to $1,278 per ounce. So what next for this week? Well, essentially, this week, one of the major news items you want to have on the radar is going to be Wednesday's minutes from the FOMC statement from earlier on this month. So we want to watch out to see what sort of impact that does have on gold prices. Now, the Federal Reserve are anticipated not to reduce interest rates over the course of this year, which at the moment is providing some support to the US dollar. In fact, the US dollar today has broken out to 2-week highs. Now, what you want to bear in mind, as you mentioned before, from a seasonal point of view, normally gold is not strong over the month of May. So we're normally looking at a negative return of minus 1.2% for gold, and it tends to be the strongest month of the year for the US dollar. And I would look at that because the US dollar is fast closing in on 2-year highs. So we've essentially positioned ourselves correctly to be long the dollar, and we're also shorting currencies against the dollar, and we've been shorting the metals here as well, so shorting gold. What I would look out for this week, therefore, is the potential for a bit more downside on gold here. The next major level of support we're looking at is going to be a potential retest of 1,200 and around 66 to 67 US dollars per ounce. That would take us back down towards the 5-month lows. Those are the swing lows, but then we're looking for evidence of buyers to potentially come back in at that zone. Hedge funds and money managers have again, over the latest week, they've increased their net long positions on gold, and we could see buyers come back in, essentially trying to get a better price for gold. So around that 1260 to 1267 layer, the major support here is in fact 1267. I am looking again at a range of approximately 200 points for this week on gold. So I'm looking at a range of 1267 up to around 1287 over the course of this week. What could happen is that gold does sell off in the lead up to the FOMC statement, or the minutes of the FOMC, which are on Wednesday, and then we see gold under pressure around that 1267 level and potentially rebound from there, depending on whether the dollar gives back some profits, because the dollar at the moment is trading at 2-week highs. We're very close to that 98 level. If we do see some profit taking around the minutes of the FOMC, and if we do see any sort of narrative or the rhetoric from the minutes of the FOMC, which is more on the side of being dovish in their overall stance, that is where the US dollar could give back some of the recent gains, and we could see gold potentially break out from there, finding support around that 1267 level. On the flip side of that, let's say gold doesn't hold support. We get a breakdown to 1267. If we then see 1267 give way, the price is likely to then come down to the next major levels, which are around that 1260 to 1255 zone. That's what I would look at if gold just wasn't able to catch a bid. And that's assuming that gold does break down to those swing lows. At the moment, gold is trading around 1,275 US dollars. It hasn't quite got there, but at the moment, the dollar strength is definitely prevalent in the market right now. We're seeing the very typical seasonal move, which is for the dollar to appreciate over this month of May, to be one of the strongest currencies over the month of May. Normally the metals, we do see pressure to the downside. As we've mentioned before, sell in May and go away is often the term which has been coined in the commodity markets, especially for the metals over the month of May. We're definitely seeing that at the moment. And of course, you can capitalize on that. So I hope you did capitalize on that last week. And this week, we're looking for that range trade. So you could potentially look to sell gold down towards that 1267 zone of support. And then we'll look to see if we see evidence of buyers come in, trying to get a better price for gold and potentially a rebound in price, perhaps later on in the week after we get the minutes of the FOMC. But just bear in mind, if we do see a hawkish Fed from that, if we see the dollar break out above 2-year highs, that's where gold could then break down back below 1267, and we could see a move back down to the 1260 to 1255 zone. So have that on the radar. But for me right now, gold's still very much a range-bound market. Look to trade that range of approximately that 200-point range per week, and you'll often be on the right side of the trade. And finally, thank you very much for sending in your questions last week. We had a question on the US dollar index, and that's impacts on gold prices. So just to answer that in a bit more detail, what you want to have a look at, certainly when you are trading gold, you absolutely need to be watching the US dollar index. So there is a direct inverse correlation between the US dollar index and gold prices. That is because gold, for the majority of platforms, it is traded in US dollars. So therefore, what we're seeing at the moment is the US dollar has broken out to 2-week highs. That is putting pressure on gold. We're seeing gold break down inversely to 2-week lows. So you always want to be tracking the US dollar index and that inverse correlation it has on gold prices.